Good afternoon, everybody. This is Brian Dewhurst with Uncommon Wealth Partners, and I can't wait to get into this video today. We have so much jam-packed for you. Just a ton going on, and it's all good. So let's dive in. We just wanted to highlight the year-to-date averages. S&P 500 closed up 17.26 as of today, November month end. NASDAQ up 26.61. Dow Jones up 22.08. And highlighting for the first time, Bitcoin up 863.25%. And that's off of almost, they were at 11,400 the other day and pulled off quite a bit from there. But just up tremendously. Today, we want to get into our indicators and do our normal view of the market. And then we are going to look at some historical stuff, and like we promised you last week, and then we're going to get into our Bitcoin briefing. So stay with us for the end of the video if you want the Bitcoin goods. And so let's get into the charts. So we're looking at the spider, our normal view. These are our indicators. We see the S&P hitting an all-time new high. This is the ETF, not the index. I was having trouble loading some of the index data, so I just went for the ETF. And then what we normally look at here is we're looking for our blue candles above the white line. That looks good. We've got all green dots on all our multiple time frame charts. That all looks good. And on the squeeze momentum indicator, we got back to teal from dark blue. I touched on that last week, that those can intersperse and trends can continue. So that all looks good and healthy as of right now. On the spider, which we typically use when we go over the market. When we hear the term the market, typically people are referring to S&P 500. So then this is our next chart. Similar, we have the squeeze down here that looks identical. It's the same indicator, but what we're looking at up here is new green candles above the white line on the moving average. That's a 21-day. So another green bar notched in our belt, so very bullish. And then this is our 50-day moving average. Very simple, clean, just continuing to make new highs from there. Market's obviously looking hot right now. The indexes are all up, so we wouldn't be surprised to see, some sort of a pullback. You see pullbacks in here, pull back here, but we're staying on trend. That was a multi-year consolidation, a little pullback there. So all that looks good. And then finally, our moving average indicators, we have price on top of the shorter term moving averages. We have a nice kind of gap here, which is what we want to see. We designed this indicator to see a gap there. And then we have our longer term averages all fanned out. So that looks fantastic for bull moves higher. But it's not to say that we won't see volatility or pullbacks in price, which is normal and healthy. We're going to get into that here now. So in one of our last videos, we showed you this chart. This was our October month end. We showed you this long-term consolidation pattern breakout out of the box, so to speak. The S&P 500 hitting all-time high at the time in March of 2000, basically almost a 20-year bull market. Consolidation period here, and now we've broken out. So we wanted to dive in and look at things zoomed in a little bit more. So comparing this breakout here, basically 82 to 86, 87, and then this breakout here from 2013 to current. So we're going to zoom in on that. Right here, you see on top, we have, I just did them from the beginning of the year. So beginning of 1982 through actual November 30th of 86. And then I had January 1, 2013 to current 11/30/2017. Now we're using the SPX. So don't get confused. The other one I was using SPY, the ETF, and this is SPX. So the pricing looks kind of the same when we're talking about the 80s. But again, these aren't the same things. The ETF is, mirroring the index. It's not the actual index. These are the actual index. That's why the prices are different. So, but it's the same underlying asset class. So with that, you kind of see we didn't break out really from July of 1982. We broke out from there, July 1982. We started the year at about 120 on the S&P 500 and ended the year, 240, 250, or not end of the year, but that was November 30th of 1986. So a double there, 120 to 240. That's 100% return in, 4 years basically. So here, January 2013, we started off in the Dow closer to 1100. I didn't actually look it up, but we're right now here at 26. Yeah, high of 26.57. We closed at 26.47.58. So again, over probably 100% move. You see how we take off here. We have some consolidation, and then we're making new highs and some consolidation. Very similar. We took off kind of a rounding consolidation right in here through 15 and 16, where we saw that volatility on the previous charts a little bit more pronounced, and then boom, step up into higher highs. So we haven't seen any recent consolidation where the market's tracking sideways like you see here. But obviously it's going to happen at some point. It's not a matter of if, it's a matter of when. So you can see that these charts, for the most part, look pretty similar in shape and trend and overall return for the first 4 years breaking out of that long-term sideways consolidation pattern that we talked about at the end of October. And as we kind of said before, the longer markets move sideways and consolidate, historically, the bigger the upside move we should expect to see, and we're seeing that. So good news out of Washington, it appears, for those of you that want lower tax rates, it looks like the House and Senate are getting closer on that. And now let's look at, this is the S&P 500 index again, out of basically that last slide. So this would be 11/30/1986 to the peak March 24th, 2000. And even if you remember on that last slide, the market was about at 250 right there. So think 250 on the SPX, and then it just got above 1500. So that's a 600% move still that took place after 4 healthy years of 100% return. So basically what we're trying to say is, as we look out, we're really trying to look at long-term trends. And what we're saying is we think that the market is establishing higher highs, and that's uncomfortable. And lots of people are out there prognosticating that the market's going to crash. This isn't sustainable. All these different things, and that's normal. That's the way it was in the late 80s and 90s. This is unsustainable. This can't go on. This is a bubble. All these different things. But the data in the charts are just not suggesting that at all. The data in the charts, and when we compare the facts, historically, the market looks incredibly healthy. The one thing I would say that we are watching and we are monitoring very closely is the Federal Reserve balance sheet. Now, if they begin to tighten, they have alluded to raising rates slowly over the next 2 to 3 years. If they do tighten the money supply, that is one thing that could really impact this bull market, and we're monitoring that. So I'm going to bring more to you on that next video. As of right now, Dow is up large again today, setting new highs as well. So with that, let's get into Bitcoin, because honestly, that's what everybody wants to hear about. So Bitcoin. Philip and I are working on a presentation to kind of get into what is Bitcoin. We've been doing tons of research over the last 6 months on Bitcoin, cryptocurrencies, alt currencies, all those different things. It's definitely unbelievable. I heard one gentleman, compare it basically to, because we haven't really had anything to compare this to in the last 100 years. This is really what he likened it to, and I think this is fitting, was when oil and the uses for oil was discovered. It brought in a whole new paradigm shift. And I think just similar to the internet and what we experienced in the late 90s with the dot-com bubble, I think obviously these valuations, it's hard to value Bitcoin. Obviously, I think we're going to start to see metrics of how we do value Bitcoin, but the fact that it hit 10,000 this month, I think, is proof that there is a global demand for something like this, and it's not going to go away anytime soon. We did see and are seeing that the federal government, and most specifically the IRS, is targeting the exchanges where Bitcoin is traded, and they want customer information so they can issue 1099s and basically issue tax on those capital gains, is how it appears they're going to treat that. We knew that was coming. In our industry, we call it KYC, which means know your customer, and there's lots of regulations, obviously, and that's how they track people and the profits that they make. And that's how they tax those profits. And obviously, you can see here since last year on this screen, this goes back a little further than the beginning of the year. This goes back to November 30th of 2016, but up 1,200%. Our chart earlier said north of 800% gain. So obviously, the federal government wants their money. They want to tax this. We're going to see more and more regulation around Bitcoin. And also in December, we're going to see the CME group, which is the board that manages and governs futures trading, is bringing a Bitcoin futures product to the market. So lots of changes are going to happen to Bitcoin. We're going to bring you a lot more information on Bitcoin and cryptocurrency in a separate medium, not for today. But the one thing I did want to highlight with all the Bitcoin euphoria, and we're getting lots of questions. If you have questions on Bitcoin, we'd be happy to get into that with you as it relates to your own personal situation. I'm not going to give any investment advice today. But the one thing I do want to touch on is GBTC. This is an ETF, similarly that we look at SPY, this S&P 500 index ETF. That's an ETF that tracks the SPX, the S&P 500 index. So this GBTC is an ETF that tracks the price of Bitcoin. That's its goal. That's what it was designed to do. You see here, because it's an ETF, we can put it on our indicators that we showed you earlier. And you can see here that the price of this ETF is $1,521 as of the close today. So the reason I want to touch on this is because lots of people are buying this, and I see an inherent, I don't want to say flaw, but something that concerns me, and I think people really need to be aware of this. So this is kind of a public service announcement on GBTC. So you can kind of see that obviously the indicators are bullish, blue candles, it's above the white line. We have green dots. Short term, obviously, it's pulled back from its highs, just like Bitcoin has. And you see the teal bars on the squeeze. So from that's the only chart I'm going to show you on GBTC. We have obviously disclosures on these videos at the end, but I'm going to just insert another disclosure here. This is not a solicitation or recommendation to buy GBTC or Bitcoin. This is what I actually want to highlight about GBTC. So this is the website of the company that brought GBTC to market. This is Grayscale. They are the creator of this ETF, and they manage this ETF. This is their website. And here you see the symbol GBTC and QSIP. That's kind of like its social security number, if you will. It's the unique identifier that all securities have. And anyways, they're making a nice annual fee of 2% on the pot of money. So that's not a bad gig. 2% of $1 billion. Take that. But this is what I want to highlight right here. Bitcoin per share. So what this means is for every Bitcoin, close of trade today was like $9,600, one share of GBTC represents 0.09211978 of a Bitcoin. So when you take the price of Bitcoin and you multiply it by this factor, which is really like a percentage, if you will, you come up to $891.53. And so when I click back to GBTC, you're going to see it's trading at $1,521. And if you look at the actual underlying value of the Bitcoin they hold, the price of this ETF should be $891. Now that can happen. We call that a premium. But this $891 would essentially be what we call a net asset value of this ETF. And it's trading almost double that. So as you see securities come to market, like the CMA futures, I believe go live in December 11th or December 18th, somewhere in there. They're still trying to fix all the bugs and make sure everything's right to bring that out. But as you see different products come to market, Bitcoin could go up to, let's say, 12,000. And this GBTC at 1,500 would still be trading at a premium for that. So as time goes by and as more products are developed that allow you to trade Bitcoin through an ETF, through the stock market, through a TD Ameritrade or Fidelity or E-Trade or any of these other things, or any type of brokerage account, you're going to see the premium of GBTC come closer to its net asset value. So I think there's a lot of inherent risks in GBTC right now, just because you could see a move in Bitcoin. And if you're buying GBTC instead of Bitcoin, you're not going to capture that move potentially if the volume and the different products out there are going to erode this premium, in my opinion, over time. How long that's going to take, Obviously, that's going to depend on how many of these ETFs come to market, how fast they come to market. Obviously, there's a lot of money flowing into Bitcoin and to GBTC. We're seeing that with these percentage of returns, but I think this is an important thing to highlight in specifics to GBTC as it's related to Bitcoin and its sole purpose being to track the price of Bitcoin. I do think this is something, if you're going to buy GBTC on your own, that's something you need to be aware of underlying your investment or speculation. So anyways, that's our public service announcement. Like I said, we're going to have a lot more information on Bitcoin and cryptocurrency here in the future. And just wanted to highlight the market here as of the end of November 30th, and just want to wish everybody again, hope you had a great Thanksgiving with family. And as we approach Christmas, we wish you the best and just happy holidays. So thanks for watching, everybody. Take care. Bye-bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.